I think in general will be slower than last year. We actually are situated so that I would expect, and believe me, when I say expect, it's nothing is sure. Nothing's sure tomorrow, nothing's sure next year, and nothing is ever sure, either in markets or in business forecasts or anything else. And we don't pay much attention to markets or forecasts unless the markets happen to offer something interesting to do. But nevertheless, we are positioned in two respects, as you'll see from this first report. Our investment income is going to be a lot larger this year than last year, and that's built in. It does not correlate with business activity. It depends on things like hurricanes and earthquakes and other events. So on a prospective basis, on a probability basis, we're likely to have a better year this year in insurance underwriting than we had last year.
I think value investors are going to have a harder time now that there's so many of them competing for a diminished bunch of opportunities. So my advice to value investors is to get used to making less.
But I would argue that there's going to be plenty of opportunities, and part of the reason there are going to be plenty of opportunities, the tech doesn't make any difference or any of that. I mean, if you look at how the world's changed in the years since 1942 when I started, you'd say, well, how does a kid that doesn't know anything about airplanes, that doesn't know anything about engines and cars, and doesn't know anything about electricity and all that? But that really isn't that's not the world changing doesn't, or new things coming along don't take away the opportunities. What gives you opportunities is other people doing dumb things. And it's that. And I would say that, well, the 58 years we've been running Berkshire, I would say there's been a great increase in the number of people doing dumb things, and they do big dumb things, and the reason they do it to some extent is because they can get money from other people so much easier than when we started. You know, I think that investing has disappeared so much from this huge capitalistic market that anybody can play in, but that the big money is in selling other people ideas. It isn't outperforming. And I think if you don't run too much money, which we do, but if you're running small amounts of money, I think the opportunities will be greater. But then Charlie and I have always differed on this subject. He likes to tell me how gloomy the world is, and I like to tell him we'll find something, and so far we've both been kind of right. Well, the answer is to control your destiny, which we've been able to do at Berkshire. So we feel no pressure from Wall Street. We don't have investor calls. We don't have to make promises. We get a chance to make our own mistakes and occasionally find something that works well. We do learn a lot as we go along. Charlie and I have often mentioned how we learned so much when we bought See's Candy, learning all the time how consumers behave. I'm not going to be able to learn the technical aspects of businesses, but that'd be nice if I knew it, but it isn't essential. And we are obviously we've got a business at Apple which is larger than our energy business, and we may only own 5.6 or 7%, but our ownership goes up every year. And I don't understand the phone at all, but I do understand consumer behavior. And I know how people think about whether to buy a second car. I know how they go out to different. We own auto dealerships. We're learning all the time from all of our businesses how. But we just keep learning as to more about how people behave and how a good business can turn into a bad business, and how some good businesses can maintain their competitive advantage over time. We don't get smarter over time. We get a little wiser though, following it over time, and you can do it while sitting in the office with a telephone too, which we like.
I think one of the inane things that's taught in modern university education is that a vast diversification is absolutely mandatory in investing in common stocks. That is an insane idea. It's not that easy to have a vast plethora of good opportunities that are easily identified. And if you've only got 3, I'd rather be in my best ideas instead of my worst. And now, some people can't tell their best ideas from their worst, and in the act of deciding that an investment already is good, they get to thinking it's better than it is. I think we make fewer mistakes like that than other people, and that is a blessing to us. We're not so smart, but we kind of know where the edge of our smartness is. That is a very important part of practical intelligence. And a lot of people who are geniuses on IQ tests think they're a lot smarter than they are, and what they are is dangerous. But if you know the edge of your own ability pretty well, you should ignore most of the notions of our experts about what I call diversification of portfolios.
You just want to make sure you don't make any mistakes that take you out of the game or come close to taking you out of your game. You should never have a night when you're worried about investing. I mean, assuming you have any money to invest at all, and you should spend a little bit less than you earn, and you can spend a little bit more than you earn, and then you've got debt, and the chances are you'll never get out of debt. I'll make an exception in terms of a mortgage on your house.